All right, what is up? Interwebs, the Interwebs family here, Facebook, YouTube. It's great to have you guys. So, want to start the year off. Happy New Year, by the way. And we should give ourselves a round of applause. We have some sound effects. We're making it through another crazy year. All right. I do want to give you some information about the outlook for interest rates in 2022, just based on what we know, what happened in 2021, where things kind of stand today. This is my guess, right? This is a guess. We're going to look at that and then go through some of the normal stuff afterwards. So I'm going to just jump into interest rates right away. Today was a terrible day. Today was not good. We'll zoom in a second when we're going to start zoomed out. And then we'll go through a few different things. Bitcoin hit some milestones in 2021. Really interesting media information going on. This is another document that I got from Goldman Sachs. I'm probably not supposed to have. Where's my laugh at? But we're going to look at this. And we're going to kind of just take a look at some of those things that have to do with the metaverse. A lot of people have been asking about this. Hey, how do we invest in the metaverse? I'm seeing people post things about this online now. Hey, I bought property in the metaverse. Is this something that I should be doing? I'll go through some of these different coins in the metaverse you may be interested in looking into, and just kind of get some information on that. It's a crazy thing, but I'll give you my 2 cents on that. And I'm going to make a whole video about that separately. So subscribe to the channel if you want to check that out. And, I'll shoot you straight on it. I'll shoot you real straight, just like I always do. If you're looking for the truth, be prepared for it to sting sometimes. Not necessarily that it will with the metaverse, but just in general. If that's what you're looking for, this is a good place for you to be. If you want someone to tell you what you want to hear, you're going to need to go somewhere else. That's just not going to happen here. Okay, so let's take a look at interest rates here. Now, we know this is a mortgage bond chart. This is the 2.5% coupon mortgage-backed securities. MBShighway.com is where we get this information. Subscribe service. You can subscribe there if you want to get this information yourself. Now, and this is the January line right here. So I went back a little further than January on the chart, just so we could see, okay, hey, here's the actual January line. You'll notice we made our high in January. This was our high for the year, and we just kind of touched it intraday. These are daily candles, a little bit later in January, and we never got that high again. Now, important thing to note as we look at the overall trajectory, like here's where we started January, here's where we finished in December. You can see the overall trajectory of interest rates during 2021, or mortgage bonds, I should say, was lower, which means interest rates are higher. So remember, there's an inverse relationship. When bond prices go down, interest rates or the yield on those bonds go up. Inverse relationship is important to understand. We want to see these bond prices going higher. Throughout the year, they went lower. Now, it wasn't a straight line. Obviously, I just drew a straight line so you could see that's the average of the year for 2021. From the top of the first day to where we close, from the open of the first day to where we closed on the last day. That's what it looked like. Lots of ups and downs, right? But even when we were still kind of higher here, you could see the trend was trickling lower on this line. Isn't that interesting? You'll actually see this line, which I drew I just drew it based on the facts from the first day to the last day. Also, we touched it here and it bounced out. How did someone know this line was there? Also right here, you see we bounced off that line again. And then this last part of the year, we really seesawed around that line. So pretty interesting stuff, right? But overall, we saw a lot of pressure for rates to go up. Here's the good news. Gosh dang it. I meant to take myself off of here so you could actually see this. I apologize. That one out of here. Get this one out of here. There. That's what I meant for you to be able to see. So I'm going to zoom in a second, but basically what we have here is we have a downtrend, but the good news is rates did not go up as much as they should have. Okay. Now these are direct correlation, or they should be direct correlates. Mortgage bond pricing, mortgage interest rates should have a direct correlation. And in this case, we can see very clearly that they did not. Now, rates were very low at the beginning of the year in January. We can see here that was our 0% Fibonacci, and that is at 105.56. Look where we closed today after a really bad day, 101.56. So we've seen from the beginning of January 2021 to the very first day of January 2022, 400 basis points, exactly. We've lost 400 basis points, which is enormous. It's a huge amount. But have rates gotten that much worse? Not really. Not really. Conventional loans still in the low threes, even high twos. We've locked at 2.875 on Friday on a refi with almost 50% equity. So rates, that's conventional. VA, low twos. FHA, low twos. So what's going on? That's the one thing I can't answer for you. I do not have the answer for that. I do not understand it. But here's what I think is going on. I think that the banks didn't quite give us all of this. I believe, and this is why when I show you this trend line here and I'd say, hey, listen, did somebody know this was going on? Because there's bounces on this trend line, but this trend line could not have been drawn until after the year was over. Did people know that this was the trajectory? Did somebody somewhere know what was going on here? Maybe, probably, but we'll just say maybe. So if the banks knew that bonds were going to head lower, if they knew, let's say, real inflation data, for example, which is the arch enemy of these bond prices, if they knew that and they knew it was going to head lower, maybe they didn't give us the full rip. Maybe when bonds were trading up here because the Federal Reserve was buying all these bonds and the market was super liquid, risk on everywhere, everything was going up, maybe they just didn't give us the full rate sheet. Maybe they didn't give us the full pop. Maybe rates should have gone into the ones. I mean, that kind of makes sense, right? This is a 2.5% bond. We were trading at 105. Remember, these start out at 100. I can't draw zeros. This is only like a straight edge situation here. But they start off at 100. That's the initial price on these bonds. So if we start off at 100 and we get up all the way to 105, doesn't that kind of make you feel like we should be in the twos if we're talking about a 2.5% bond? Or in the ones if we're at a 2.5% bond? Yeah, probably. So it appears that the banks kind of knew what was going on. They didn't give us the full pop, even though the market was super competitive. They didn't give us the full pop because they knew it would be reined back in. As it was reined back in, that allowed them to not have to raise rates as rapidly, and therefore why we saw this sort of normal trickle. We almost saw rates decline based on this trend line, but still the total doesn't make much sense. So maybe we didn't start up here. Maybe we never got this pricing. Maybe the pricing we got was right here, and it went from right here to right here, which is not nearly as big of a change. And that's the only thing that can make sense for me. So if that is true, then maybe 2022 will be a lot more stable than it appears. Here's what I'm going to do. I'm going to refresh this. It's going to take a second. That's the easiest way to clear it up after I've drawn all over it. And it'll also start back at my normal zoom. So here's a little zoom in. Now today, as I mentioned, we lost 52 basis points, which is a screamer. I mean, it's not a good day. It's really bad. The stock market went higher. And so this is not how we want to start the year. Most importantly, we are testing the super important support zone here. I am going to zoom out just a tad bit further so you can see what we're really facing here from a true technical standpoint. We have here sort of the ultimate bear flag in play, which kind of gets drawn like this, something like that. I don't have the perfect tools to do this here, but you can kind of see this is what we're looking at. We have this downtrend and we have this support, and one of them is going to break. It appears as though the support has broken. Now, these charts aren't exact. These drawings and my figures are not exact. So it's entirely possible that although it appears as though this chart has been broken here, that this support level has been broken here, maybe it's right on it in reality. It's not necessarily exact. So maybe we stopped right on support today. And we're going to, come back up a little bit tomorrow and maybe go back down a little bit and then come back up, and then we'll really be squeezed at that point. It's really going to squeeze and we'll see which direction it's heading. The bad news is I don't have a catalyst for rates to go lower. So this is kind of the big knowledge drop, if you will. What is the catalyst for rates to go lower? Some people will say, well, the Federal Reserve is going to raise rates. That's deflationary. Deflation is good for bonds. But we've got rampant runaway inflation. So We need that to stop the bleeding. I don't think that actually heals the wound. I think that's just to stop the bleeding. So what's my catalyst for rates to go higher? What's my catalyst for people to want to invest in a 2.5% bond that has risk when there are a multitude of other investments that make a lot more sense? In fact, I'm going to make a video in the near future about how you can invest essentially in a savings account that pays 8%. And I'm in the process right now of moving all my money into it. That is what I would call savings money, or what I call real estate money. So that is something that we are paying close attention to. I believe that in 2022, we're going to see rates go up. So what happens when rates go up? How bad will it be? We're probably going to see rates go up anywhere from 0.5% to 1%. So you're going to start to see, these low 2 rates for VA and FHA, they're going to go to high 2s, maybe even low 3s in a worst case scenario. Conventional loans, which are maybe in the high 2s in a best case scenario, are going to go to the low 3s. Those low 3 rates could go into the high 3s. And, that's a best case scenario. So we're going to see rates go up. That is pretty much guaranteed. The question is just how much and how quickly. They're going to go up. What is the consequence going to be to real estate values as that happens? So the consequence is going to be to real estate values, we are going to see a mad frenzy. Now, my guess is that, and this is just historically speaking what happens, when rates go up, people tend to really jump and get after it. You'd think, well, when rates go down, that's when people jump on it. No, when rates go down, a lot of people go, no, wait a minute, I'm going to wait for rates to keep going lower. Why would I want to go now if rates are going down? But when rates go up, it's a fence pusher. It pushes people off the fence. People who are like, oh, maybe we should wait until next year. Well, if it starts to become clear that next year means higher interest rates, that will get people to go, you know what, maybe we shouldn't renew the lease. Maybe we should go look. Let's get pre-approved. Let's go look. Let's see if we can find something that it'll push people in the direction of buying before rates go higher. So when we have this happening, and you're going to start to see news articles as the rates go up, and we've already started to see it, news articles saying, hey, rates higher again, or higher again this month. Rates went up again. When you start to see those things, those trends, that is marketing to buyers, basically. It's going to push buyers into action. They're going to want to get locked in before it's too late. Okay, so expect that. Expect more frenzy. Expect more competition. Expect more buyers to get off the fence when that starts to take place, which means bold prediction time, 2022 will be even crazier than 2021. That's my prediction for a real estate standpoint, because we have less inventory in 2022 than we did in 2021. And I think we have some catalysts here to push some of the people who've been on the sidelines off the sidelines and into the game. All right. So higher rates, more activity. Rates are still really good. How much does it mean to my rate if rates go up? How much does it mean to my payment if rates go up 0.5%? I did this calculation for someone. It's a couple $100. It definitely has an impact. That's at a median price point of like $650. It's a couple $100. It definitely makes a difference. Will it keep people from buying a home? Will it keep people from qualifying for a home? Maybe in a few cases, but overall, for the amount of demand, the amount of buyers we have, for the amount of homes that are available, I don't think it makes any kind of impact in a negative way. I think it just puts more people in the buyer pool. Okay, so that's interest rate outlook, drilled down, zoomed out. Bonds have been going down all year. Bonds went down 400 basis points in the last 12 months, which is an enormous loss. We have not lost that much in interest rates. Let me tell you now the worst case scenario. The worst case scenario for that is that the only reason bonds have been held up and why we have this support level here is because the Federal Reserve, and they're about to start exiting stage left. On top of raising the overnight lending rate, if they also exit stage left, then we very well may have a situation where rates could go up, and they could go up quickly. Now, if rates go up quickly, that can have a bad effect on the real estate market. We saw that in 2014. For those of you who are in the business or who remember that, the summer of 2014, I believe it was in June, interest rates went up 1% pretty much overnight. I mean, it was just a couple of days, and all of a sudden rates were low threes, high fours, or low threes, low fours. Boom, just like that. And it caused people to just stop. I mean, it was like the music stopped and everything just went. So as long as we don't have a quick rate jump like that, the market will remain stable. And I believe that is what they're shooting for. I believe that is why they're raising rates, because the Federal Reserve knows that they are getting out, and they know that they are going to be slowly unwinding their mortgage-backed security purchase, and they need to get inflation under control. Otherwise, who's going to buy these bonds? You'll have nothing but sellers, and they'll just murder these bonds, and rates will go through the roof. So they're doing it in what I believe to be is the smart way and the most careful way and the most calculated way. Okay, that's mortgage rates. That's the outlook for 2022. Let me give you a preview on a couple things. We'll talk about where some other stuff is. Today, first day of the year, clearly risk on is still the understanding on Wall Street, at least. Dow's up, S&P's up, NASDAQ's up. Everybody's up. Russell's up. Everything's up. You see bonds here took a hit. Oil, $76, still doing really well. Gold's actually over 1,800, amazingly. Pretty much oscillates between 1,780 and 1,804. It's like watching paint dry. It really does hurt my eyes to watch that one. Crypto's pretty much red today. Bitcoin has been hovering in this mid 40,000s. I feel like I've been saying that for weeks and weeks and weeks. And seems to be ranging between 40 and 50. Right now, there's just a ton of crypto investors who are flocking to Metaverse and NFTs and all kinds of other, new coins. And unfortunately, there is a massive bubble that's being built, not in Bitcoin, but in these other coins and some of this other stuff that's going on. Most of that stuff it reminds me of the .com bubble almost exactly. There was some cool stuff. I put this link in the description. Bitcoin launched 13 years ago. Here's 8 milestones from the past year. A lot of really amazing stuff happened for Bitcoin. It's just not the sexiest one anymore because it's 46,000. So a lot of people are looking for the one that's a fraction of a penny. They can buy 80 million, coins for $1,000 like you could when Bitcoin first launched, and they're hoping that it'll one day get to $1 or $1,000 or whatever. Everyone wants to try to get rich on it. When you have the majority of investors looking to hit grand slams and get rich, it's bad because they'll tend to rotate out of investments on a regular basis. And when the music stops, it can get really, really ugly. And that's what I'm afraid of right now. This one I thought was interesting. I want to share this with you. Third quarter 2021 media ratings, average viewers per show. The number one show is the Joe Rogan Experience. He's a comedian doing a podcast. How incredible is that? I mean, it's just unbelievable. But he's an interesting guy. He's a self-deprecating guy. He doesn't claim to be a smart guy, but he's very curious. He asks a lot of questions, sort of like the traditional journalist, what you expect out of a journalist, someone to be curious, ask questions, to not take anyone's side really. But something to keep in mind, he only does 2 or 3 podcasts a week at this 11 million views per podcast, whereas people like Tucker Carlson, Hannity, Ingram, Maddow, and these other shows are on 5 days a week. So it's just something to keep in mind when you're looking at that, but I thought it was interesting, so I'll include it in there for you guys. And then here's the Goldman Sachs issuance, which is from their investment banking division, which essentially they just sort of categorize some of these different things that are going on in the digital investment space. And I think it is really, really interesting to see what Goldman Sachs' perspective is, because not only is Goldman Sachs a very trusted Wall Street bank, like one of the biggest Wall Street banks. They're very connected to the government. And notice here under pure, they use the word pure cryptocurrencies. Bitcoin's the only one that is labeled as a digital currency, a store of value, and a medium of exchange. It touches all 3. They have only one, Bitcoin. We've noticed that Morgan Stanley has been buying GBTC, the Grayscale Bitcoin Trust, hand over fist recently. In fact, every quarter they've been buying tens of thousands of them. And so you're starting to see Bitcoin is going to become more of an institutional investment, as now maybe between here and its ultimate all-time maximum high, maybe there's 100x left in Bitcoin over the next 20 years or 30 years or something. And people are still looking for that, 1,000x or 10,000x in some of these smaller coins. It's really interesting. Utility tokens, Ethereum, Binance has been a big one. Filecoin, I haven't really seen a whole lot of. Stable coins, the Binance US dollar, USD coin, DAI, Tether, Cello. This Gemini dollar is the one I'm going to actually do a whole video about, because Gemini, the company, is the one that's founded by the Winklevoss twins. If you remember the Social Network, the movie about Facebook, those are the guys. Man, gosh dang it, I'm so sorry. I'm such a bad producer. The Winklevoss twins, they're the guys who were actually had the idea for Facebook. Zuckerberg stole it from them. Then they sued him before Facebook went public, and he paid them out like $60 million. The Winklevoss twins, I think it's Tyler and Cameron, they started Gemini, which is a crypto exchange, and they created Gemini US dollar, which they claim on their website that you will always be able to get $1 US for your Gemini dollar. If you put your money in Gemini dollars, they pay you 8% APY, and the interest compounds daily. They pay you interest daily on that. I'm going to make a whole video about that and a few other different ways that you can use some of these different cryptos to make safer investments. They're called stable coins for a reason. The price is stable. Most crypto assets, that is not the case. So there's some cool stuff on that. NFTs, I really can't tell you much about right now. I haven't done a ton of research on them. I really don't understand what the big deal is with it. To me, it's complete and pure insanity, and just proof that there's bubbles all over the place in this digital space right now, which makes sense. And then financial infrastructure, Coinbase, obviously, crypto.com is huge. Remember the Staples Center? Yeah, it's called the Crypto.com Center now. That's a very, very interesting one, Crypto.com. They're offering a ton of stuff. In fact, if you buy their coin, CRO, they actually pay, I think it's 29% APY for just holding on to their Crypto.com coin, CRO, which you can buy with their app or on their website. How crazy is that? So there's some really interesting things going on. Let me tell you something. The financial world is moving so fast. It frightens me. Makes me feel like a grandpa. I go and I watch these videos and I try to learn about these things, and I'm just like, what in the hell are these people talking about? I mean, I get so lost so fast. The world is moving very, very quickly. Very, very quickly. This independent, decentralized, digital financial world is taking over, and it is going to be everything eventually. And it's moving so fast. It's crazy. It's moving so fast. People are asking me how to invest in the metaverse. You know what? I am researching it myself. I am watching these videos. I'm trying to see what different people are saying about it. Go do your own research. Just simply type into YouTube, how to invest in metaverse. That's what I did. Watch some of these videos. Trying to buy into the hype. A lot of clickbait stuff, on here, like, look, get in early. Oh, okay. 1 year, $1 million. Oh, get in early again. You're going to see the 100x potential. Early buyers will make billions. What? Just listen, take all of the thumbnails with a grain of salt, listen to the actual content, what these people are saying, and then go and research the stuff that they're talking about. Okay. Don't ever buy anything or invest in anything just because someone else that you think knows what they're doing. So I always take it. Even when I tell you, like, I'm buying in oil, I'm investing in oil stocks. Remember we did that when oil was like in the 50s and now it's 75. I was saying, hey, this is what I'm doing. If you do it, that's great. But here's what I'm doing and here's why I'm doing it. Check it out yourself. Decide for yourself. Here's one thing you can do. If you're interested in buying some crypto that is connected to the metaverse, here on CoinMarketCap, you can actually click right here where it says Metaverse. Am I saying that right? Is it Metaverse or Metaverse? Metaverse, probably. So they'll tell you which coins, it'll list them in order, that are connected and used in the metaverse. The first one here, Decentraland Mana, is $3. This is actually really, really interesting. Sandbox also really, really interesting. All these are down here recently. There's actually a bunch of cryptos that are down like 50%, that they're not on, the front page here. So people don't know it. But if you track a bunch of this stuff and you look at some of the big losers, cryptos are getting killed right now, some of them. So anyway, this will give you them in order. And you can see here, Decentraland Mana is actually number 30 in total. All crypto market caps, almost $6 billion, 30th. on the list. Axie Infinity, AXS, 31. So a lot of these, look at these. How many? 1, 2, 3, 4, 5, 6. Okay, Wax got out. So 6. 6 of the top 100 cryptos are connected to the metaverse. So the metaverse is already 6% of the top cryptos. And it's just going to keep going from there. There's 175 cryptos on this list that are connected to the metaverse. Some people will be tempted to go in and look at this and go, oh, which one's like the cheapest one? Let's see, which one is the cheapest one? UFO Gaming, Point or Radio Kaka. That's hysterical. UFO Gaming, by far cheaper, right? Look, 4 zeros before you get to a number, 0.4 zeros, then 2292. And people will be tempted to go and to get into these because they go, oh, okay, well, if this one gets to $1, look, I can spend $2,000 and I'll have like 4 million coins. Just know if you do that, you really are just betting on black. Worse than that, your chances of that winning. A lot of these investments people are going to say, get in early, get in early, get in early. Not necessarily the right thing to do. Think about the .com bubble. And people are saying, oh, you got to get this website. You got to buy this stock. You got to get into this company before it's too late. It was much smarter to sit back and wait and see which companies actually had traction. See which companies actually produce something. See which tokens actually do something useful first. And maybe you will miss the first double or something like that. But guess what? You won't lose money on trying to buy 20 different ones so that you make sure that you have at least one winner. And I think that's the thing that's lost. Because what if you pick 20 and you don't pick any winners? And 3 of the ones you didn't pick are huge winners. You know what I mean? There's also other investments that are more complete. Would you say sort of like an ETF for the metaverse? There is a Metaverse Etf. In fact, I'll just go ahead and show it to you here. I am going to do a separate video about this, but this is the end of this video. So most people probably aren't watching this right now. So if you are, let me hook you up. It's just Meta. That's it. This is an ETF that's already set up to buy and invest in the different companies that are participating in the metaverse. Okay. So it's an easy way to play it. You can play it anywhere you want in your brokerage account, in your investment account, in your retirement account, no problem. Pretty easy to do. And then let's see, was there one other one I wanted to do? Oh, and then just Facebook. I mean, the 100% most obvious investment, if you want to invest in the metaverse without really having to worry too much about, hey, is this going to go to zero? Meta platforms, aka Facebook, just invest in that. That's really all you need to do, because not only is Facebook going to make a tremendous amount of money on the metaverse, but they also have other businesses. They own a ton of stuff. Guys, Facebook owns so much, hundreds and hundreds of companies Facebook owns. Facebook owns so much. Facebook in itself is like a big ETF, but they have 100% monopoly on profits from the metaverse. They have hired 10,000 people plus, over 10,000 people now, who are working on the metaverse to make it as real as possible. So there's a few other things you can consider in there, and I will definitely go through the list of the things that I believe are the most when I make my metaverse investment video. But just want to give you a little preview, if you're watching at the end of this one, that's what we can expect. Okay, so let's do this. Rates going higher. Still great opportunity to refi. I have never had this many refinances in my pipeline before. People are getting it. They're starting to get the message. They're seeing. Some of them are just finally believing me. I've been telling you, lock it in. Don't wait for rates to go lower. Rates are going higher. Get locked in. Get locked in. 0.25% later, you're finally ready to go. Whatever it takes to get you there. I know when rates go up, it will push people into action. That's what's happening right now. And it makes sense. If you have a VA loan and you want to refinance to conventional, this is another video I'm making in the very near future. If you want to refinance a VA loan to conventional, do that soon. Do that really, really soon. Because the opportunity to do that at a lower rate is going to run away from us pretty quickly here, I think, especially in the first quarter. I could be wrong. Gosh, I hope I'm wrong. But it just doesn't look good. This chart looks terrible. This chart looks terrible. It doesn't look good. Could the Fed bail us out? Could they come in and pump this thing back up and get us back into a range? Possibly. But give me a call. Shoot me a text. Send me an email. If you want to buy, if you want to refi, especially if you got that VA loan, you want to refi to conventional, free up your VA for future purchase down the road. Shoot me an email, call, text anytime. Here to help. Hopefully this is helpful for you guys. Have a great day. And I'm going to be doing a lot of videos this week. I can feel it. See you soon.